And all of a sudden, about a week before closing, these particular buyers discover, the title company, they discover there's this $18,000 lien hanging out there. And surprise, now they're short funds to close on the purchase. They need that $18,000 and they don't have it.
Thank you again for joining us on our podcast today. I thought this was a really important subject that's now happening is for the forbearance during COVID. And as soon as I started to talk to Jeff about it, I thought, okay, we got to get a podcast on this. So I'd like to introduce you to Jeff Graham with Fairway Mortgage. And we're going to talk about really some things that are popping up and some surprises. We don't like surprises. So kind of tell me that story that here, Jeff, of why we really need to talk about this and what people need to know.
Yeah, so Jeff Graham here, Fairway Home Mortgage. I belong to a cohort of other loan officers where we get together weekly and discuss, problems and issues that we, as loan officers, that we are working through. And one came to light last week that I feel like we need to really bring into the open. We've all heard this thing, right? So we've all heard this, there are no free lunches in life, right? That there's no such thing as a free lunch. And so,
oh, definitely. Yeah, you got to pay. You pay the piper. We were raised with that somewhere along the way.
in some fashion, you got to pay the piper, right? And so it's come to my attention that and we all, or I was aware of this, and I know everybody else was too. During the beginning of COVID, the president at that time rolled out something called the CARES Act. Mm-hmm. The CARES Act, what that did is it allowed homeowners to not make their mortgage payment and go into what's called a forbearance, and it wouldn't affect your credit. It wouldn't affect your ability to buy a home moving forward. If you, in today, where those forbearance or the CARES Act is now over, and forbearance, if you get into a spot where you can't make your mortgage payment, you run the risk of just going into foreclosure. Oftentimes, the mortgage servicers and the banks will work with you to get caught up, or you can go through what's called a loan modification, but you can't just skip your payments anymore like you did during that time. Now, here's the trick, though. The free lunch part, where a lot of people think, and I've heard this 100 times, they just tack it on to the end of the loan.
Yeah, that's what it's just with a pause.
Yeah.
You just kind of start up again because there's a lot of things happening during COVID and
yes,
special programs and loans and whatever. And that's what you thought. You just tack it on at the end. So that's not the case.
Well, that's not the case. There is, when you buy a home, when you purchase a home, at the very end, when you're signing all of your loan documents, there's two documents in particular that are really virtually set in stone, and it's the deed and the note. So the deed is think of as the title to your home. That's right. The chain of ownership of the particular property, and then of course the note. The note is the mortgage, the terms of the mortgage. Those two things are set in stone. They really can't be changed legally. Right. Now, of course, they can be modified, which is kind of funny to say. Yeah, you can modify it. Well, modifying is just replacing the previous note with a new one. And so if somebody goes through a loan modification, it is likely that, let's say, for example, your mortgage payment is you bought a house in 2019 and your mortgage payment is $3,000. And the CARES Act, I forget when the CARES Act, I believe it was in 2020, maybe 2021, where the CARES Act really was in full effect.
Right.
During that time, let's say these particular borrowers called me and they said, what do we do? I explained to them that this program was rolling out, not to worry, you'll be able to stay in your home. And they did. They were eligible, they got unemployment, they took advantage of, they skipped a bunch of payments. I recall these particular borrowers calling me, I don't know, close to a year later, wanting to refi their existing loan. And they said, I asked them about the payments that they had skipped. I believe they had skipped like 6 or 8 payments. I forget. But if it was 6 payments, 6 times 3 is 18, right? So approximately $18,000 in payments that they haven't made.
Right.
And so I asked them about the questions about where their finances were. He said, we're doing great. We were eligible for unemployment. They were able to take advantage of some special programs. They were flush with cash. If I remember correctly, it was somewhere in the neighborhood of $40,000 that they were eligible for in benefits, right?
Yeah.
And so I encouraged them to pay those back payments that they hadn't paid, because again, I said in the beginning, there's no such thing as a free lunch, right? And
Yeah,
I couldn't.
we always, the way it was, you dial it in is, yeah, you pause them, and those are, it comes to the end of the loan.
Yeah.
So just sort of like it's like you're starting fresh.
Yeah. Well, these particular borrowers weren't eligible to refi at that time until that forbearance part of it was taken care of. And I never did a refi for them. As far as I know, they pocketed the $40,000 and took a nice vacation and just kept their mortgage as it was. And I know a lot of people did that. And here's where this conversation came to light last week in my cohort. So here we are, 2026. We all know about somewhere between 5 and 7 years is the amount of time that people move, or they
Yep.
are considering selling their home or moving. And so this example that I've given with my particular client is I'm going to modify the story. They did refi. This particular client in my cohort did do the refi. And what had happened during the refi was they started the purchase was originally an FHA loan. Now this is important. It was an FHA loan that they used to buy it in 2019. And in, let's say, 2022, they were able to refi into a much lower rate.
Yep.
And what they thought is exactly what we talked about earlier, is it just got tacked on to the end and it just got paid off, right? So the truth is, what happened, M&T Mortgage is the mortgage servicer of the original loan, the FHA loan. When they skipped those 6 payments, M&T Mortgage filed a claim with HUD against the mortgage insurance so that they could be made whole on those 6 payments. HUD wrote a check for $18,000, and M&T Mortgage is fine. They refied. And here's the catch. They put a lien against that borrower's home, but it wasn't recorded properly. So when they went through the refi, the $18,000 wasn't reconciled. Fast forward, here we are in 2026. They want to sell the home and purchase a new one. Here's the catch. Here's the issue. That lien that wasn't originally recorded properly still isn't recorded properly, but it's still a lien out there nonetheless. And so they put their house on the market to sell. They get under contract to sell their home. They also get under contract to purchase their home.
Okay.
And so we have legal and binding contracts to buy a home and to sell a home. And all of a sudden, about a week before closing, these particular buyers discover, the title company, they discover there's this $18,000 lien hanging out there. And surprise, now they're short funds to close on the purchase. They need that $18,000 and they don't have it. Now, I don't know if you know this. I'm sure you do. You're a great real estate agent. It's pretty easy to get out of purchasing a home. Your earnest money is at risk.
Right.
If you decide you don't want to buy the home, you're going to lose you run the risk of losing your earnest money. But in this case, these particular borrowers don't qualify with that $18,000 shortage.
So it just didn't go. So we thought it all went away, and
Yeah.
here it's now sneaking up on them again.
Yeah, surprise! No free lunch. We want our 18 grand back. Yeah, and so here they are, unable to qualify on the purchase. So they get a disqualification letter from their lender. Hey, you don't qualify. No problem. Get your earnest money back. Life goes on. But remember, they're under contract to sell their home as well.
Right.
Now that that buyer is not backing down. That buyer wants that house. And so the real estate agent and those particular buyers are threatening lawsuits and aren't willing to let it go. So unfortunately, these particular buyers are going to be forced to sell their home and then go rent before they can save up that $18,000 and then go and buy their home, which is tragic. And so my advice to everyone listening
Right.
is when you're sitting down and you're talking to your real estate professional, and this is really critical, make sure you communicate to the real estate agent that's getting ready to list your home that you did take advantage of some forbearance. And even if your loan was refinanced, you want to make double, triple check sure that there was never a HUD claim paid and there's not any sort of lien for those forbearance payments just lingering out there somewhere. It shocked these particular buyers, and I can't imagine. I feel my heart goes out to them. I can't imagine being in that scenario where you're homeless. You have
Right.
no option but to rent for the foreseeable future when you thought, hey, we're going to be moving and moving into our new house and all that. So,
Right. No, that's crazy. Yeah, because I mean, COVID. There was so much going on in COVID. We just got everybody's minds spinning. The different loans and the different programs that were out there. So is this? It is basically because it's an FHA thing, and then with HUD, right?
right. So government loans, when I say a government loan, what I'm referring to is FHA, USDA. These loans are guaranteed by HUD. Well, VA is guaranteed by VA, but most commonly, most people are a lot of first time buyers especially are taking advantage of really good interest rates and lower payments using an FHA loan, which is great. They're fantastic loan programs. And everybody thinks that, or it's common to think that having mortgage insurance is a bad thing, but it's not. What mortgage insurance allows you to do is purchase a home with less than 20% down. But it is insurance. Make no mistake about it, it is insurance. And what the insurance is for is it protects the bank in the event where the borrower can't or doesn't make their payments. And so in this case, these borrowers went into a forbearance. The loans are being serviced by some bank, in this case M&T Bank,
Right.
but
Right.
it could be Fairway, it could be Guild, it could be Rocket or Red, whoever. It could be any lender,
Right.
and they file that claim with HUD, and HUD, of course, pays out, makes the bank or the mortgage servicer whole,
Right.
and life goes on. But then what happens is HUD will file that lien, and as long, of course, I would tell you 9 times out of 10 the lien gets filed properly, and you when you sit down with a buyer, you're opening a preliminary title, and that
Yeah.
lien,
Oh,
you
yeah.
know,
You have to. Right.
but in the essence of having a conversation with the seller and buyer, it's a really simple question. Did you take advantage of a forbearance during COVID? And if they say yes, then you just want to have the conversation with them, because none of us like 11th hour surprises,
Oh
and
no, not
and
at all.
especially one where a buyer could end up homeless. Knock on wood, I've never had that happen to me personally, but
Right.
in a scenario like that, it's like that's a heartbreaker for sure.
Oh yeah. So again, it goes back to having the right people
Yes,
looking out for you
yes,
that know these things, know the questions to ask. I always say, where's the boogeyman?
yeah,
So how do we find the boogeyman? Let's get it. Let's look under the bed. Let's look at all look at all the
yeah,
closets. Find it. And make sure that everything's clear. So that's actually, I know now that's a question I'm going to ask as I'm talking to sellers,
yeah,
to definitely add that of it, just as we're checking, did you ever do that
yeah,
forbearance, and do you know what happened to it?
yeah.
So
Yeah, I mean, to your point about working with professionals, I'm a loan officer, a full-time loan officer with Fairway Home Mortgage. I've been here for right at 10 years, and it's all I do, or loans on residential real estate. It could be an investment property, it could be a primary residence, but that's all I do. I don't work at a bar on the weekends. I
right.
don't detail
Yep.
cars on the side. I don't do any. This is it. This is all I do, day in and day out, 7 days a week. I'm always available.
Yep.
Just like you're a professional real estate agent. And for folks at home that are watching this, I don't know if they're aware, I'm sure they are. Steve is a fantastic agent. He's always staying up on these things. And just like me, this is all he does. He doesn't work at the bar on the weekends. He doesn't detail cars on the side. I mean, the residential real estate
That's all
is
we do.
is all that Steve does. So
Yeah.
yeah, that really matters in a real estate transaction that you have the right people around you. I don't have all the answers, I don't, but I am surrounded by amazing people. When something does come up like this, then I can go find the answers, and you're in the exact same boat.
Well, that's what, again, is part of that circle. I really appreciate how you brought that up of because of the circle of we're with, we get these scenarios that pop up, and so, oh, hey, this can help. We help each other to make our businesses better and
Absolutely.
improve what we're doing, and improve the experience that much more for our clients.
Yep.
And that's where just that having the right group of folks to work with is so helpful. Yeah, because
Yes.
again, I always thought, I remember when you first talked to me about it was, oh yeah, no, it just goes on the back side of it, and instead of your full 30 years, it's 30 years plus 4 months. Like that's how it was sold
Yeah.
when those that had to take advantage of it. So
Yeah.
so Jeff, thank you so much for
Yes.
calling me and sharing this. It was, again, really important for those. I appreciate, again, you saying this is something we got to get out to
Yep.
more people so that they can do it. Check again, just know what you know. So
Yes. Yes.
yep, I think that's important. So again, this is Jeff Graham with Fairway Mortgage. I'm Steve McNamer. This is Pierce County Real Estate Advice with Steve. And again, thank you all for listening.